All right, good morning, everyone. Lou Sporcino, Man Over Market, and Anthony Borsalino. And we're getting ready to do the morning meeting. Today is the 7th of October, and we're going to talk about the ES. So, yesterday, I got a little over ambitious to think that the market would keep going higher yesterday. We ended up having, making that high and then consolidating and then going back. Last night, I was doing work here, watching some stuff. Actually, I was watching some stuff on the Smithsonian channel and learning a lot of different things. But and also was doing some research on the charts. And lo and behold, it went down and made the low about 10:30 last night. Made that low at 80, the bottom at 62.5, I believe it is. And maybe I got my handle wrong. But anyway, and then we, rallied from that point the rest of the evening and went all the way up. If you remember yesterday's video, I put a green chart on the bottom and said, look, the market's going to stay bullish as long as we stay above this area. That was the bottom of the area. It just took all day and all night to get there, and post-close, we got there. So yesterday was a consolidation day. I really believe today is a bullish day as long as the market stays above the 72.5 area, or actually when we look at value, but 72.5 is key. It's our bull bear zone. A lot of volume put it in that area yesterday, and the targets I'm going to give you are going to be above the market. And I think we talked about, we had a question. I think the market can definitely get back up to the 2100 area. And all we're going to do is get a couple of days or 4 or 5 days that run up. Now we had a lower close, 5 higher days, 1 lower close. We'll see what kind of pattern will develop. But I think it's going to be one of those trades. Yesterday, we received a retracement after we made the highs, went back down, kind of, consolidated all day between our middle. When we put out the middle, really kind of consolidated between after we got under 72.5 down to 62.5. So in that 10-point handle, it was consolidated. Those are the kind of days you get chopped up. I did it to myself yesterday. I chopped myself up. And you got to understand that not every day is going to be a trend day. So, all right, let's get to chart sharing. And then if you got any questions, let's get them in, and we'll talk from that point on. All right. Hopefully you're not getting too much of an echo. I don't like to wear these things over my head. All right. Hope I'm on the right. Wrong chart. Stop screen sharing. Let me get to the right chart. I think this is now. All right. All right. So what I did here is I put side by side, sort of like two different approaches to a Fibonacci. So what I did on the chart on the left is that this is the chart that I've been showing you for months, right? So this ends up being the high and low from the high this year, 2134. The low was put in on February, not March, February at 1806 of 2014. All right. And if you take a look at that, all right. And so what I did, if you took about the 80% retracement, all right, I'm sorry, 61.8% retracement comes in at like 1980. All right. And then on this chart over here, I'll open it up. This is our recent low, 1831 to the highs of 2134. And if you look at the 50% retracement, it's like 1980 to 82. All right. So according to this chart, we're above our 50%, which came in at 1933. All right. So like we said yesterday, I look for confluence, or we look for different avenues or different market indicators that will kind of reinforce each other. So here's one that reinforces it, right? So and yesterday we made that high up in the 80s, and then we broke down and we consolidated all day, right? And we got our lower close right here. Okay, same thing here. We got our lower close right now. We went down to here and made the low of 1960 half, and then right here, right? And so the market is telling me that we're going to have to sustain above the 1980 to 82 area for the market to keep going up and approach over here would be 21 or 2018 or 2020. Over here is 20 half. All right. So I think that the market, if we sustain above that, that's where we're going. All right. And all we got to do is start receiving some good news from the market as far as like I said yesterday. Just think of all the bad news the market have absorbed. We got the Fed didn't move off the 0% interest rates. We've got China and all the companies and the global slowdown that it's affecting. We've got the strong dollar and the currency, which hasn't been positive for the rest of the world. All right. We've got Europe, Mario Draghi, and we have all the different things that's going on with his quantitative easing program and so on. We've got the Volkswagen scandal. All right. So, we've got the dollar hurting Europe, and we've got commodity prices worldwide that have all turned to the down, right? We've got lower oil. We've got lower just commodity prices across the board, which you would think would be a positive for inflation because the money that the average person is saving, they're not going to put that in the bank. They're going to spend it because they're getting things cheaper. However, it's also indicative of a slowdown because the demand for the products are down, right? So little economics 101, all right? So taking a look at our market today, all right, we've got a value area high of 1975 half. 1971 half is the point of control. It's also the bull bear zone. Value area low is 1967 half. I really think if the market gets back inside value, that this is going to be key right here. Can it hold the 72 half? All right. Because I think we spent so much time there yesterday, and it was sort of like the pivot move yesterday, right? From up and down. So I think that that's going to be key for us today. And what I've done is I've kind of like, what I did is let me move it over here. So 75 half. And I colored in down to the bull bear zone. All right. So when we look at it, all right. So let's look at overnight action. All right. So we've got a high up here of 1985 half. For everybody who's not familiar with profile, okay, here's a classic unfinished top. We got three letters, NPQ, going straight across. Right here, you see this how this is up here and creates a tail. All right. So here's a classic unfinished top up here at 1985 half. All right. Yesterday I drew these lines, 1978 half. All right. I had a target of 1983.75 up here. We've got another target of 1986. All right. Above 1986. All right. I've got single prints starting at 1988 and a quarter. I've got an unfinished top at 1989. All right. And I've got a naked value area low right here at 1989 half. All right. And then I have single print stopping up to 1992.75. Okay. I'm not going to go all the way back in the chart. I've designated these on the chart already, 88 and a quarter up to 92.75. Okay. So those are my targets, the near-term targets on the upside for right now. All right. Now, excuse me, let me scroll back down. All right. Now, overnight action. Okay. We've got the high of value right up here at 1985.5. We've got an overnight mode of 1981. All right. And we've got a low right down here. The low value area low is 1970. Okay. And then we got an overnight low right down here. Okay. Of 1960.5. All right. Now, interestingly enough, this kind of stopped at 1960.5. All right. There's single prints from here. All right. Down to 57.5. And from 57.5, we have them all the way down to, these are all, I didn't mark them all the way down, but I'm telling you, there's single prints down there. So this is where the market stopped yesterday. This is where it stopped. And that was overnight and post close. And this was the, this line, this green area right here. If I look at my data, all right, I had 1964 down to 1960.75 as the area I thought was going to be the key area for support. And surprisingly enough, we tested it post close and overnight, and then we've rallied all the way from up there. So you got a low here, 60.5, okay, which looks like an unfinished bottom and so on. But at this point, we've got a lot of single prints down below since we've made the 5-day rally. So, right now, like I said it yesterday, we're going to get in that period where we keep making highs, and we keep looking at each other and going, hey, where's this retracement coming? We may not get it. We may just get little different areas of breaks that we get to buy. Okay. And it's going to be stupid. I know we go through those periods, that whole time that we made the original lows a year ago and in 1806 and just kept going up from there. And I'm going, well, they got to retrace. They have a retrace. What, it took a year to retrace? It's crazy. It's crazy. The market's a lot different than I've ever viewed it. Doing this 30 years, it makes no rhyme or reason sometimes. And that's because the market is so dependent on the outside news of the Federal Reserve and the central banks. They are so involved in the way the markets trade now. All right. So got to be a buyer of dips as long as we stay above the bull bear zone. Here's the value area high, 71.5 is the bull bear zone. Also, it's a point of control. Got to be a buyer of dips. Pay attention to the CCI. When we get these out to you, see where the market is in relationship to what's going on with momentum and so on. So right now, it made these highs and it's backed off. We got an unfinished top. We got to see what kind of momentum we get on the way up. Okay. All right. Other markets. Let's finish this up. Right now, the 5-minute pivot is sitting right here. Okay. At 1975.5, which is the top of value. All right. I've got the YM right here, which is the Dow. And its 5-minute pivot is sitting right here. Okay. At what is this? Goes crosshairs at 16,736. So it's in a buy. Okay. All right. Let's bring this back up. We got the NASDAQ. All right. And yesterday, you get these choppy days when the NASDAQ went negative and the rest were staying positive. And that means you're going to get a choppy day, right? Here's the NASDAQ, 43.14 1/4. That's where the 5-minute pivot's at. So it's in a buy. All right. And let's bring up the Russell. Pull up the Russell for you right here. Okay. Move it out so you can see it a little better. All right. And we've got that down here at 1132.20. 1132.20. All right. So we've got all the pivots in a buy. All right. And so the market, may, break down to here, take if it takes out the 5-minute pivot, then you got to be a little cautious about how far the retracement will go. All right. And then, trade the market accordingly. I don't think it's, the market's going to have to get below value, below the 72 area for it to even be a sell. All right. And we'll judge it and readjust as we see that. But I don't even know how far it can go down. I mean, it's in a bull mode unless some sort of news comes out. All right. Let's talk about other markets. Oh, that's not on the screen. Let's bring this in here. All right. Okay. Here's bonds. All right. So I don't know, because of the market rally, that people are still hanging on to the idea that there's probably going to get a rate hike. But, everybody on the news, as you can see behind me, Bloomberg, is saying that the Fed funds and the futures have a 30% chance that we'll still get it this year. I don't think we're going to get it this year. I think we're going to get it late next year, maybe October of next year. 57.31 is the value area high. Point of control is 157.22, and then 157.10 is the value area low. And I think the bull bear zone is also right here at 157.22. 157.22. Okay, so bonds are trading below value, and I think what's happened is that the bond players have kind of flattened out. They're flattened out, and I think they're I've talked to a lot of bond traders, and they're tired of getting beat up because of the market manipulation done or market participation. It's hard to trade a market that's being manipulated by a third party, right? The market factors are not the only thing. All right, so gold we got up here at 1145.70. Now just traded back inside value. Made a high up here at 1153. Okay, bull bear zone is 1148, which we just violated. Point of control 1146.90, and then we got the value area low of 1148.5. 1148.5. I think gold is kind of the other thing that's just sitting here, right? Earlier in the year, 1130 was the high, was the low for the most of the year, and then we took it out. So gold is, is an animal I can't figure out right now, because and I tell people this all the time, it has nothing to do with supply. Nothing. It just has to do with demand. It's a demand product. It's who wants it and for what reason. So when you think about it, are people buying it as a hedge of inflation? No way. We don't have inflation. So there's not a hedge of inflation right now. I think right now that the market, I think gold is being, if it's being kept and hoarded, they're using it to prop up their currency in their own books to readjust their debts for some of the bigger economies, and it's being bought for the fact that there could be some sort of global meltdown if there was a worldwide catastrophe. So I think that right now that's what's keeping gold where it's at. Everybody thought that gold would be under $1,000 by now, but it's not. All right. Oil, trying to make it shot up there at $50. I don't know. Maybe I'm wrong. Maybe Goldman Sachs is wrong. But, they were talking about, $20 oil. I think that, not only overproduction, but, there's other fuel sources out there that are being produced that are putting a lot of pressure on the price of oil, which is a good thing for us, right? It's a good thing for us, the consumer. I like it now that when I fill up my car, it's only $40 and not $80. So anyway, trading above value, 49.08 is top of value, 48.02, point of control. Bull bear zone is going to be 48. Value area low is 47.28. All right. Okay. I wish I can give you a different outlook on what I think, but I'm telling you right now, I think the market is poised to go up and, just take back what it's been doing for the last couple of months, and it's going to get back up to the 2100 area. I think that's where the market's going. Any questions, Anthony?
CL to 50 today after 9:30 a.m. inventory report. Buy dips. What do you think?
All right, I'm gonna bring it back down. And we're going to start expanding our service, people, and do a lot more of this stuff. We're going to build in the templates now, so we give you the same thing we give you on S&Ps. CL. All right, here's my bull bear zone, $48. All right, I'm hesitant with oil because I still have a negative bias on oil. I think oil is going on. Here's our 5-minute pivot sitting up above. It's actually right now in a sell. Okay, so be careful on the retracement to 48. Okay, let me see if I can give you a 15-minute pivot off of CL. All right, so 15-minute pivot is sitting right here at 49.04. 49.04. Okay. Let's see what happens if they take out the 15-minute, 49. Let me see where the 30-minute's sitting. All right. And won't be surprised me that the 30-minute pivot is right here at 48.54. All right. So, be cognizant of the numbers I just gave you. Here's the 30-minute pivot. All right. That means this market could go down and test this 48, the bull bear zone, not take out the 30-minute and head back up. So I'd be looking for this, if you're looking for a dip, make sure we don't get a close, a 30-minute close under that 48.54. Any other questions?
Nope, covered everything.
All right. Everybody have a good day trading. Stop sharing screen. Go back to here. Next week, Pat Tabbitt's going to be in town all week. Got any technical questions about the indicators? And Anthony, turn around. Let me see your face.
Answering a question.
You're answering a question?
Answering a question.
What was it?
It's just about the 5-minute pivots.
Okay.
5-minute pivots.
Yeah, so understand that these pivots that we put out are 5-minute pivots. Those are proprietary pivots. Here's my dog. Say hi to everybody. Turn around. Everybody say LBJ. All right. All right. Anyway, so the pivots that we put are our own pivots that Pat designed. I say it. I got to stop. Pat designed 30 years, 25 years ago. These have been 25 years in the making, and those are our pivots, not to be confused with floor trader pivots, which are the high, low, close divided by 3. Okay, so those are the things you need to understand. They're different. And when we talk about a pivot change, it means that the market closed above that 5-minute pivot. So if the pivot's at 1984, and I tell you the pivot's at 84, and the market closed above, and it was a buy, okay, and we closed above it, or I'm sorry, it was a sell, and we closed above it, it will then switch to a buy, and it resets itself to a different support level that would be lower. But what it is a changing of momentum and price and momentum that we've been tracking for the last 15 years. So those are important things to understand. If I give you a pivot, the market has to close below that price, and they also are static. They're not static, they're dynamic. They move up and down with different pricing. So that's another thing that we have to be careful of. Any other questions then?
That's it.
All right, everybody. Have a good day trading. Thanks for staying with us, and stay with us on Twitter because we've been pretty good lately. We've been pretty good. All right. Talk to you later.